Hi guys, today I have again decided to come up in front of you and analyze a new article, a new topic, a new subject. My previous subject was also was very thoughtful and very new, and it also helped in understanding how the learning of the system from the COVID-19 situation can be applied to other industries. So it was very interesting topic. We put some of our intelligence and try to understand that what are the learnings, what are the problems, what were the solutions, and how the solutions can be embed or integrate in the other industries. Today's topic is also very relevant. As soon as I show the topic, you'll understand that the subject is very interesting. But before getting into that, I just want to tell you to my new viewers that my name is Shamek, and I'm doing this series for you guys, and the objective is to have a learned discussion and understanding of different ideas, and so that you also can start think about those ideas and apply in your life. So before getting into it, as I said at the beginning of every such discussion, that we are not maintaining any decorum here. So I may go slow, fast, depending on the requirement of the discussion. Though it will not hamper the understanding and the detailing part of it. And third is that whatever we discuss, there should be a learning for you, that you can go back and apply the same learning in your life. So now I am getting into the topic, and then we'll start discussing about it. So just wait for 2 seconds. Now this is the topic. So you can see the source of the topic is Harvard Business Review. So Harvard Business Review is very well known platform which publishes new ideas, all supported by research which goes in the back end. So the topic, I'm just reading the topic: helping low income workers stay out of debt. Helping low income workers stay out of debt. Now forget about for which country they have done the research on before writing the article. The topic is so much valid for our country, in India's context also, that it can be an extremely good idea if the research, the tactics, the new ideas that are brought in as a concept in Western country can also be very well be applied in country like India or any other growing or stagnated countries which are mostly affected by the COVID-19 situation. Again, COVID-19 is coming in the picture because these issues are current issues, and these are mainly brought into the picture, or some companies are doing brainstorming on this issue because of the changing dynamics after COVID-19. And this dynamic has changed not only for the employees or the workers, but it also has changed for the employers, people who employ, whether state governments or central governments or private organizations or startups. So everything has changed after COVID-19. A lot of new ideas are coming in. So this topic is very very important, and very relevant considering the current situation. So before getting into the analysis, the topic or the subject is backed by some research, and those researches are conducted in the respective countries for on which the article has been built up, right? So there is a background before writing this article, but there is no research as of now mentioned in the article which can be quoted for analyzing or for India or for Southeast Asia or for these countries, So there is no direct research has been conducted or no initiative has been mentioned in this article which are relevant for India. But as a intelligent people, we will try to decode what has been said and how things can be implied or applied or used for our purpose, our benefit. Okay, so before getting into the topic, so basically in this topic, some interesting actions were taken by uh, some innovative entrepreneurial businesses. So businesses which have just started, but they have started with a new idea, and they are kind of replacing the some alternate institutions that are helping people to get financial assistance, from such as financial institutions like NBFC firms, non-banking financial corporations, or banks, or small boutique firms that provide loans. So they're trying to replace it with a more formal, lower risk business formula, so that that can be applied in a more safer way, but also at the same time all the parties which are participating in the idea is getting benefited. So let's try to decode this idea with a yeah, just a minute. Okay, just a minute. Yeah. So okay. Okay, so if we just look at the um, uh, financial structure. Oh, I'm just going outside, kya? Okay, just a minute. Okay, I will start writing from the left corner, so it will not be an issue, I think. My internet is giving some problem, so bear with me for the time being. Okay, so I'm writing from this left corner maybe, so that it doesn't go outside the board. So financial structure, financial structure, how it works in our economy. So suppose if I look, there is a body of employers, and there is a bigger body called workforce, right? So how it operates: employers provide salary to workforce to get services back from them. So for employers, give financial assistance to workforce to get back services that are needed to run their companies. So, very basic idea. Now, the complications start when there are parallel institutions. So, which are the parallel institutions? Which are the parallel institutions? Parallel institutes. So, it can be government, it can be banks, it can be NBFCs. NBFCs are non-banking financial companies. It can be other boutique companies which are providing personal services like small loans, or maybe angel investors providing small loans for people who are doing consulting or running a self business, or working on their own. So there can be multiple organizations that are part of this parallel universe, right? So besides the employer-employee, and they are also part of employers, but I am talking about corporates that are not in any doing any financial service as such, but they are into business and they are providing salary to get certain services, but they are supported by certain parallel institutions that help, um, yeah, so that help the system to kind of, just a minute, I'm trying to, yeah, so they're trying to assist and help the whole this employer workforce dynamics in different ways, financial ways, or maybe they're providing some additional services, or maybe infrastructure. So if we talk about government, so they're definitely providing infrastructure services, infrastructure as a service, uh, from the tax amount that they collect, right? Yeah, so this is the dynamic. Now, certain companies in this parallel universe is coming up with some new ideas. What way the ideas are? Let's decode how the ideas are manufactured. Okay, so just, okay. Okay, so what way the ideas are? So suppose, okay, so suppose there is a company called A, and there is an employee, sorry, called B. So B get salary from A either weekly, bi-weekly, monthly. So depending on the terms and conditions, B receives salary from A. Now we all know that the salary that our workforce receive are not always on time. Especially consider the COVID-19 situation where our temporary workforce neither on the laid off in many places, but they are getting salary at a much later date, right? But and they need to plan and they don't know how to plan it out. So there are certain parallel institutions which are saying that we will ensure that you get a salary on time, but for that you need to pay us a small token to us to get that service. So there is a concept of C company, this is part of the parallel universe, right? Which are saying that your account, so the employee, this is the employee, right? And this is the employer. This is the employee, this is the employer. Now employees, whenever they are into contract, the employees share their bank account detail. Sorry, just not this one, this one. I just misspelled this, so I'm writing it again. Okay, so they shared their bank account details to have automatic circulation of money in their bank account, right? Now what the C companies are saying, that your account will be directly accessed by us, and because you have given us the permission to access your bank account, it will help us to get the money whenever I am the salary amount is credited. We will see that at certain date you are getting the salary amount, and the fees will be deducted. So suppose I have said that for take for just for an example, suppose I say 500 rupees per year. So 500 rupees per year for very small worker, I will charge you for this transaction, or for this for our services. So company C is saying that I will charge some token amount for running our operation from the employee, and we will provide the service. Now how things work like is that, so this is A. Suppose they are giving salary, they used to give salary on 15th to B, right? Now due to the COVID situation, this is a new situation. A is actually, if there is no intermediary like C, so they are providing a salary on 20th. So there is how much delay? 5 days delay, right? So there is a 5 days of delay in crediting salary, right? So let me, yeah, so now what C is saying, now what C is doing is this is another parallel route where the account is directly accessed by this C company without going salary here. They are accessing the salary here, but they are also accessing the salary on 20th according to the new situation, but they are paying back to the employee on 15th. So they are receiving the amount they are crediting to your account as employee salary account. So they are bearing 5 days of interest loss. 5 days of interest loss. What do you mean by interest loss? So suppose I have 100 rupees in my bank account. If I get 5 rupees today and spend 5 rupees today, the amount remains same, right? But if I spend 5 rupees today, this is today, and if I receive 5 rupees after 30 days, so there is a 30-day lag. So just to clear out, I'm clearing this out, right? You can go back to the video and check again what I am discussing here, but I am clearing out. Okay, so what how it happens is, why they're charging additional amount is that, so suppose C company today has 100 rupees, yeah, take 100 crore in their account. Okay, I'm a bad writer, I don't know, somehow I'm just not writing properly, but I need to do it because you need to understand what I'm trying to say. Okay, so okay, so company C suppose today has 100 crore in their bank account. Hmm. Now, as we have discussed in our previous screen, that they're spending suppose 10 crore in advance, as advance payment, as advance payment 10 crore advance payment to the employees. Now when they are doing it, so for suppose that these employees used to get salaries on 15th, so they are paying, right now they are getting on 20th if there is no intermediary, but because of the C company's intervention, they are now getting salary on 15th. But the employer, here the employer actually releasing the amount on 20th, so there is a 5 days of delay, and company C can access this on 20th. So this 5 days of lagging, so if this 5 days of, so suppose this 10 crore, if it remained in company C's bank account, so it will earn certain interest rate. So every account earns certain interest rate from banks wherever you have stored your money, right? So due to this 5 days lagging, the suppose the interest rate is R percentage, um, R percentage per year. So we can convert R by 365 is equal to interest per day. So interest the company C is paying is R by 365 interest rate per day, right? Okay, now what you are doing is, this R by 365 into 5 days is your interest rate payment, okay, for this amount of transaction, for 10 crore. So 10 crore I have disbursed, this is applied to this 10 crore amount. This interest rate is applied to this 10 crore amount because there is a 5 days delays in amount disbursal and the amount receiving from the employer. Now, if the 10 crore into, if we call it this whole thing, if we call it R1, so this 10 crore into R1 percentage is the interest amount that this C is bearing because of the delay in receiving the amount. So you're getting it, right? So, and why they will bear this amount? So for that only, they charge certain money who subscribe to this model. Now, how people can subscribe? So for that, there are also multiple options which we can which actually can happen, because business is not a straightforward way. There can be multiple companies which are in the similar business, right? So I'm just trying to, because I just also want that you go through this article. So okay, uh, so how the subscription can happen? So this C company can directly contact employer A and say that please put this model into your business. B doesn't need to get into any contract, so there is no contract here with B, but there is a contract here with company employer A, right? And they say please embed this format into your business, because you have consultant, or you have temporary workforce, or there is an issue of payment delay on us as such, and you pay me this amount, whatever token amount they are charging, you pay me the amount. B doesn't have to bear anything, right? So the token charge for that are asked by company C is on A. Sorry, is on A. ठीक है? So what could be the second model? Second model can be that C is not dealing with A. They are saying there is an informal contract, not a payment contract, informal collaboration, to say that we will contact your employees. The first step is the contact. So we will contact your employees. Second step is we'll sell our business idea. And third step is who all subscribe the services. So basically company C is taking permission for company A, and in return they may be getting the contact number of employees, right? And they're directly contacting employees, they're selling their business idea, and whosoever subscribe to the idea is getting the benefit. Now there is a glitch in this particular model. This is model 2, the previous slide was model 1. So this glitch is that they have to sustain their business, there has to be a mass subscription. So if you go to every employee one to one, so their cost of operation would be much higher, right? So their cost of operation would be much very high. So it's better that they go by this model A, when where they directly reach the employer and do the contract. The model 3 also can exist. So if you talk about model 3, where is the cross sign? Yeah. So model 3 also can exist. So model 3 is that so suppose 100 rupees was the token amount which they are earning. Now because as both excuse me, so as both A and B is getting some benefit from this service, excuse me guys, so as both A and B are getting benefit from the service, so C is saying I will charge sorry 50 from here and 50 from there. So I will charge um, I will divide the token amount into employer and employees. This is actually a very good model for C. Right? Okay. So this is the whole business model and the idea that how they are functioning. Okay. What was the video? Sorry guys, my health is not okay, so I'm trying to rebuild myself. Yeah. So now there are certain benefits of the whole model which we have not discussed. So benefit for B, who are the B? They are the employees. Sorry, I always make some small mistakes. Okay, so the B are the employees. So what are the benefits? So one is timely receive of salary, automation. Automation means if there are certain charges applied to avail the service, it is getting deducted from the salary itself. So automated. So there is no additional headache. Third, additional financial support. I will come into that. So there are some additional support which are also being provided by C company, which is the supporting company, the financial company, right? Four is peace of mind. Peace of mind, and the COVID-19 impact is minimized by this model. So these are the direct benefit for employees. Now दोनों क्यों आ रहा है यार? हाँ. Now what are the benefit for A, which is the employer? biggest benefit is retention. So especially this temporary workforce, the managing the temporary workforce is more costlier for businesses, because any default in your operation or in dealing with this employees or the workforce uh, can cause turnover. So turnover means that employees are leaving your organization. So if this is the organization, employees are leaving your organization, which is called turnover. So this is why this is in inversely related, right? So retention high means turnover low. So first major benefit, which is not only from the perspective of work but also from the perspective of cost, because when the turnover is high, the operational when the turnover is high, the operational cost of any business goes high, because there is certain business operation that you need to function, which can begin from training, which can begin from work management, which can include the HR, human resource operations. So there are costs involved everywhere while dealing with an employee. So when turnover happens, you need to bring on new people in the system, you need to train them. It takes time for a new employee to get adjusted into the new company or new system where they are getting employed. So there are multiple cost factor that are there. So if your turnover rate going down due to the new model, it's a big boon. So there also, as you can see in the topic, I'm moving the cursor here. So they're also topping the same, we're discussing the same thing. And why the model C, which we just highlighted in our previous slide, is important. So model C is important because these companies are also getting benefit. So why only charge one party and not the other? So charge both the parties, right? Second benefit, which is for everyone. So a second big benefit for so this is the major benefit which an employer can get from this, the retention factor, right? Now to discuss this, and the additional which I talked about the benefit at for this employee, we talked about additional features. So there is an interesting feature called loan. It can be personal loan, educational loan, or whatever. So there are certain loans that the C organizations providing to employee B. The loans are also because the financial strains are right now affected due to COVID-19. So these loans can help them to build their career, to safeguard certain personal matter, and due to this particular model, there is extremely low risk that this companies need to bear. Why? Because they are using salary as collateral. Now, as these companies are already in talk with the employer and they know that by 20th, as we are discussing, for example, that by 20th they know that they will get the salary in their account and they will deduct whatever fees the employee had to pay. So the revenue earning is anyway ensured. So there is no default. If company A default, then there can be an issue. But ongoing basis, there is no risk. So they are lowering the risk with the model, but they can use this model. So whatever, so suppose they're by this model, if they're earning X revenue, so they say that out of this X revenue, there is X1 amount of revenue which I am dedicating for my business operation. I'm talking about C, right? Business operation. I will dedicate the extra amount for my future growth, which is further investment in some other companies or businesses. X3, I will give loans. Some amount, whatever the total earning of the company C, they're saying I will give this amount in form of loan to this to the employees. So they will get financial support. They don't have to worry, and as the collateral, such a strong collateral, their risk is low. So the interest rate that they charge on these loans are also low. So that's the research that they have done in European and US, that the research that shows the interest rate that they're charging is lower than the banks and other financial institutions. So a great model. So I'm again just highlighting this document here. I'll just go through some of the stanzas. So this line is very important. So just read this line. So these companies are called fintech companies. Fintech companies, they have some system in place, computerized automated system in place, but they work as a financial service providers. So they call fintech companies. So this fintech tools won't solve America's income disparity, but they can help people on the margins who are currently being exploited by the existing financial system. And it's in employers' interest as well, a rare win-win. So try to understand, it's a broader issue. So what they're saying is that this kind of service may not solve the income disparity. Income disparity means what? From where the income disparity comes in. Let us explain that. So income disparity means that 5-day principle. So as much as I delay, so suppose 100 rupees are about to pay to B, which is the employee from A's account. If I pay today, the A do not earn any interest because this 100 rupees is with the bank right now. A's bank account, the company's bank account. So if I pay this 100 rupees today, so there is zero interest rate I am earning on this. A is earning on this 100 rupees because I have disbursed this amount. But if I pay 5 days late, so this 5 into, as I said, if total interest rate is R, so R by 365, 5 days interest rate into this 100 is actually my earning, the company is earning, because I'm giving a very low figure right now, right? I'm just using this as an example. Don't take it like I'm giving you facts. I'm giving you a model and I'm trying to explain with it. So this is the amount that company is saving by 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 the delay payment. So they're exploiting. Exploitation start from here. They're exploiting. Similar thing is happening with B in reverse. So there is a multitude effect. Understand what I'm trying to say? So there is a multiplicity in the whole matter. So this company B, the same for the employee B. If they would have received 5 days before, they would have earned this interest rate, which will be different. So if this is R1, this is R2, but their interest rate would be different. But they would have saved this amount if they would have received 5 days in advance, but they are not saving because they are getting a delayed payment. Understood? So this is called exploitation. So actually this is helping to reduce the exploitation of industries, right? So hope I could describe the whole topic. Now implications. So the learning perspective. So what we learn from this. So our learning. So learning from whom? So learning from first is the employer companies, people who are running their business. Second are for people like who are employed. So learning from them, you can really get benefit. So people, suppose in India certain companies are facing these problems, so they can avoid these problems by availing such service, because it help in retention of manpower and the cost of operation goes down, because most of the companies, especially the small companies, they spend a lot of money in retention and employees, right? For employed, the great benefit is saving themselves from exploitation. So saving themselves from exploitation. Second is additional financial support. Additional financial support. Third is lower cost. So cost saving for both of them. Certain token amount obviously they are paying to the service providers, but biggest benefit for employer retention. Biggest benefit retention. Second parallel benefit is happiness index. So your employees are safe, they're feeling safe and they're feeling happy, they're getting the salary on time, they don't have to worry about their life, their living and all that. So the happiness index is improving, which can result in many other benefit. So these are the major learning. So for India like country, we definitely need such interceptor, which we can call them. So let call them. So let's call the C companies as interceptors. Sorry, interceptors. So this C companies, the interceptor, the market interceptors need to be created and bring in our system, so that the low scale, low wage earner people can protect themselves from exploitation. And also in India like country, you have heard that central government brought in certain schemes for the unstructured manpower, unstructured workforce, and they're giving some additional loans and benefits, something like that, which is also financial. So this can lower the financial burden of government. So if private companies like this, fintech companies can brought in into the system, then it can reduce the stress on the government. They don't need to give incentive or impetus to the system for managing with respect to managing the economy. So this is a great learning. I also learned a lot of new things from here, and with the discussion I am also understanding how the things are working. So hope my uh, discussion had given some input to you and you have understood how things are working, and we will bring in more such topic. Thank you and best of luck. Good night.